Good morning, Garage Gang. It is Wednesday, February 25th, and we are back in the garage with the hood open and the engine idling. Let's check the gauges first. Bitcoin is trading right around $67,000. Ethereum is sitting near $2,000. Solana is around $85. Those are your dashboard lights this morning. Now here is the tone of the track. The macro engine is still tight, liquidity is not flooding in, it is not free money season. The reserve tank that used to cushion the market is basically empty. That means when we hit a bump, the suspension feels it immediately. There is no soft landing system absorbing shocks anymore. Headlines are still dominated by tariffs and geopolitical tension. Trade friction is back in the conversation. When tariffs escalate, it is like adding weight to the car while you are trying to accelerate. Margins get squeezed. Supply chains get rerouted. The dollar firms up because global capital wants a safer garage to park in. At the same time, oil risk has not disappeared. The Strait of Hormuz conversation is not just noise. If that choke point tightens, energy prices spike. And when oil spikes, inflation expectations flare up. When inflation expectations flare up, yields move. When yields move, tech and crypto feel it immediately. That is the chain reaction. Now let's talk about what we are actually seeing in the tape. Bitcoin back above 67,000 feels constructive, but this is not a clean breakout. This is more like a turbo that is trying to spool while traction control keeps flashing. We just came off a deep drawdown from the all-time highs around 126,000. The basis trade unwound. Hedge funds exited the easy arbitrage. That was mechanical selling, not emotional panic. Here is the key: fast money left. Slow money is still there. Advisors and longer-term allocators have been accumulating through the ETF structure even while short-term flows turn negative. That creates tension under the hood. It is like replacing race tires while the car is still moving. Ethereum at 2,000 is holding a psychological line. 2,000 is not just a number. It is a checkpoint. If Ethereum builds above it, that is stability returning to the drivetrain. If it loses it, we are back in chop mode with no clear torque. Solana around $85 is acting like the lightweight sports car. It moves faster. It reacts harder. When risk appetite comes back, Solana tends to sprint. When liquidity tightens, it skids faster too. Right now it is stable, but it needs follow-through volume to really separate. Equities are pressing up against resistance near 6,900 on the S&P. That level is like a garage door that keeps trying to close. If it fails there and rolls over, the mechanical sellers kick in. If it breaks through cleanly, dealers flip positioning and volatility can compress. Volatility itself is not screaming panic. The VIX is calm compared to bond volatility. That is a contradiction. Bonds are nervous, stocks are pretending to be fine. When those two disagree, you do not ignore it, you respect it. So what is our read this morning? We are in a contracting liquidity regime with pockets of resilience.